Good morning, everybody. This is Lori Winters. I'm the founder and CEO of Thread, and just a couple housekeeping notes before we start. I want to make sure that everybody can hear me. So if anyone would just chat in the chat that yes, you can hear me, that would be awesome. And if during this time you have problems hearing, or I guess if you hear me, you won't have this problem, but you can get to anybody that you know is logged in that may not be able to hear. You can always dial in through the invite that you received. So before we get started, just a couple other housekeeping notes. Everybody right now is on mute, so but you're able to chat that questions that you have throughout this time. And if I don't answer any of the questions or somebody's question, please know that I'm going to get answers out as soon as possible. This is being recorded, and you'll get a copy of the recording and the slides within 24 hours. We tried to get it a little bit sooner than that, but you'll get them at least within 24 hours. So again, thank you guys so much for tuning in. Please excuse, most of my team right now is remote, about 98%. We chose to do that to keep the few that are in the office to process live checks, to keep them healthy and safe. And so we're trying to move as fast as possible and create as much content as we can to get this information out to everybody. And so forgive if there's some typos here, if you hear birds chirping in the background or cars. It's just the nature of all of us right now, I guess. So the opportunity here is this is just offered to our current clients and no prospects, nobody else, no other guests. And the whole purpose here is to help you guys navigate through some of this stuff and get as much information as possible, along with information on the CARES Act and how to apply and some other information. So without further ado, I'm going to jump into this. My goal real quick is on the agenda. I'm going to try to wrap this up, within 45 minutes. I know that you guys are getting flooded with information, but the agenda is I'm just going to spend a minute or two on managing during a crisis. This is something that I've been dealing with my own company. I'm just going to give you a few tips of what I've learned through this. I'm going to mainly spend a lot of the time on the CARES Act key points, specifically around the payroll protection program and the PPP, how to apply. I'm going to give you a little bit of quick update on iSolved and how the technology is supporting us and how Thread as a company can help you as well. So just one really quick slide on crisis management for those of you. I'm sure you're doing a great job through this. I've needed to, get help from other CEOs and other great leaders. And so I just want to, give some content, some information of what I have been dealing with and what I've learned. Really the most important thing I think in managing in a time of crisis is define reality. Define your reality. And I've used this with my team, and it was, I love the Stockdale paradox. It's about Admiral Jim Stockdale, who was a POW, prisoner of war, during the Vietnam War for 8 years. And he said that some people during a crisis try to just stay optimistic. And, they would say, we're going to be out of here by Christmas, and then Christmas would come, and then they would be, sad. And then they'd say, we're going to be out of here by Easter, and then Easter would come, and then they would end up dying, what he said is brokenhearted. So I think the most important thing, and what I've talked to my team about, is you want to have faith that you're going to persevere this stuff. And I 100% believe we all will. But you also want to have honesty, or have the honesty to face the reality and not to bury our heads in the sand. So what we've done as a team is we've created a 3-step process of managing during a crisis. And it's really fairly simple: recognize, analyze, and respond. So in the recognizing side, you deal with what you control. And, we are playing not to lose, because playing not to lose is not a winning strategy. So we're also looking for opportunities during this time. Second step is analyzing. And in analyzing, what we've done is mitigating our risk. There's, every company has a different level of risk that they're dealing with right now. We've spent a lot of time on financial analysis. What does it look like with, X% of revenue loss over X, period of time? So really be honest about that and make preemptive moves. And I know a lot of you guys have. I know some of my clients have laid off 100% of their staff, which is really terrible right now and stressful. And so everybody's managing through this. And then during this time, what I've told my team also is, out of every economic and historical issue that's happened like this, there's always some type of opportunities that come about. So always looking for opportunities out of this as well. And then thirdly, respond. Don't procrastinate. Don't try to be perfect. You need to protect your company while at the same time looking for opportunities that come out of this crisis. So that's really what we've done. And most importantly, what I've seen in my company that's been very helpful is continuing with transparent and honest communication with our team. We do audio meetings. We do a weekly state of the company meeting via video. And that's been important because my team most of them are remote. And so maintaining the culture that we've created and maintaining calmness during this time when our clients are in crisis and the the world's in crisis, I think maintaining that communication ongoing has been really important to all of us. So I just wanted to share just a few things of what we've been doing. So I want to talk mainly about the CARES Act, and I know it's amazing to see our government moving so fast, because a lot of times it does not happen that way, but we've seen so much coming through that it's hard for software companies and all of banks and financial institutions and everybody else to keep up with it, because these acts can get passed fairly quickly, but they haven't really thought through all of the details yet. So we are still looking for guidance on some of these things, and you'll hear me talk about that. I'm going to spend a good bit of time on the Paycheck Protection Program, because everybody here you guys are our clients, and this, I believe, is one of the most important pieces that has come through the CARES Act for everybody to be able to get help financially as quickly as possible. I'm going to spend a couple minutes on the employee retention credit. This is important for companies that have lost more than 50% of their gross receipts. And then I'm going to talk a little bit about the employer tax deferral that is in the CARES Act as well. And I'm going to talk about the unemployment increase, which you may already know about, but I'm going to touch on that as well. So these are the CARES Act that I'm going to talk about, and then I'm going to talk about the other items I solved and how we're helping. So first of all, and there's a lot of detail here, so I apologize, but I didn't want to miss anything, and you guys are going to get copies of the slides, so you'll be able to go back and reference. But everybody's been hearing about the different options, the PPP, Payroll Protection Program, versus the EIDL, Economic Injury Disaster Loans. Both are handled, both are backed by the SBA, but 100% backed by the government, especially on the PPP side. The EIDL loans are expedited SBA loans that are up to 30 years, low interest. You get $10,000 emergency cash within 3 days of loan application, even if you don't qualify, that does not have to be paid back. This is the first thing that came out before the CARES Act came out. It's a little more complicated. There is collateral required, anything over $25,000. And I did put the URL there, that there's a new URL that's supposedly working much better. I think the SBA got overwhelmed with loan applications. I'm going to spend most of the time, though, on this talking about the PPP. The PPP is the payroll protection loan that is for companies with fewer than 500 employees. It requires a good faith certification that the loan is necessary due to the current economic conditions related to the COVID-19 pandemic. I'm going to go into more detail on calculating this, but this is just the bullet point. It's based on 250% of your monthly average gross payroll, and this would include health insurance premiums. I read all of the original questions. A lot of you guys submitted questions, and I'm trying to answer most of those through this presentation. I know this was one of them. It does include health insurance premiums, and it also includes retirement contributions. You do have to exclude employees that make over 100,000. You don't have to exclude the whole salary. You exclude over and above the 100,000 in the calculation. I'll get more into that. The kicker here is that this becomes a grant, and it's forgiven as long as you maintain the same number of employees, and I've got a calculation on that as well in a minute. I'm also going to talk about how we're going to apply, but there are many fintech companies that are working with banks on this, so they're really trying to expedite this. I've heard some may be available by the end of this week. So who is eligible? Any small business with fewer than 500 employees. I noticed that we have a good number of churches that are on this call and submitted questions. Yes, nonprofits and religious schools and churches are included. So 501c3 organizations with fewer than 500 employees are included. An individual who operates as a sole proprietor can also get access to this. An individual who operates as an independent contractor can get access to this. An individual who is self-employed who regularly carries on any trade or business. And I see I messed up this little slide here, but a tribal business concern that meets the SBA size standard, and a 501c19 veterans organization that also meets the SBA size standard would be able to apply for this. In addition, there are some special rules, and I know this is a big deal for some of our restaurant and hospitality clients. But if you are in the accommodation and food service sector, and it's a NAICS code starting with 72, the 500 employee rule is applied on a per physical location basis. So that is interesting. It's per physical location. So there's some really large restaurant groups out there, but per location have fewer than 500, they would qualify. If you are operating as a franchise or receive financial assistance from an approved small business investment company, the normal affiliation rules do not apply. So they're opening this up to many more than would normally be able to apply for SBA. Something that I did see recently was that the 500 employee threshold includes all employees, full-time, part-time, and any other status. I'm trying to get a little more clarification on that versus FTEs, but right now what I'm reading is 500 includes all of those. So the loan amount, we talked about 250% of your average monthly payroll, but it would include salary, wage, commission, or similar compensation, payment of cash tips or equivalent, payment for vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payment required for the provisions of group health care benefits, including insurance premiums, payment of any retirement benefit, payment of state or local tax assessed on the compensation of the employee. Something that I saw as a question that came across from a lot of the churches is clarification on is housing allowance included. And I have read some very church-specific information on this, and as of right now, there's no guidance on that. So the government worked really hard to get this out fast without really thinking through some of the real detailed questions that are now coming out. We're looking to get guidance on that very, very soon. But as of right now, they've not answered whether the housing allowance will be included or not. There's some different things if you're a sole proprietor or independent contractor. So basically, what will be included is an amount under 100,000 and under for 1 year salary. So there are some very specific things around sole proprietors and independent contractors. There are some exclusions. So compensation of an individual employee in excess of an annual salary of $100,000, you can include a maximum of 100,000 per person. So if someone makes 130,000, you can include 100,000 of that in the calculation. Any compensation of an employee whose principal place of residence is outside the U.S. And then the qualified sick leave wages for which a credit is allowed. This is in the Families First Coronavirus Response Act, where you're getting credits for the emergency family leave. That will not be included in this because you're already getting tax credits for that. So how do you calculate this? Well, we know it's capped at $10 million. If you're a non-seasonal employer, the calculation is 2.5 times the employer's average monthly payroll cost in the 1 year period prior to the date of the loan. So Everybody's could be a little bit different, and I'm going to talk about how we're going to try to help you guys, because the loan has to be requested by June 30th. So some companies may not request this right away. So it will be the average monthly 1 year period prior to the date of the loan origination. For seasonal employers, the period is between, and you get to pick February 15th or March 1st, 2019 through June 30th of 2019. So I know we have clients out there that are seasonal employers. You get to pick a little bit of a different time period during when the seasonal numbers would be higher. For employers that were not in business in 2019, so new companies, you calculate January and February of 2020 to figure out that gross payroll dollar. And again, I think I already said this, but for employees paid more than $100,000, only the amount up to $100,000 is included. There were questions on this in the registration. If an employer already has an SBA loan, which was obtained after January 31st, 2020, this loan may be included in the loan amount and can be refinanced. So there's a lot of nuances around if you already applied for an SBA loan or received one this year. There's some interesting pieces around that of what they're trying to do. Okay, so as we talked about, and this has been really complicated and trying to get a full answer on, but the portion of this loan that you use to retain employees, and there's some caveats and calculations around this, will be forgiven. And I'm going to talk about some of the caveats, also some of the notes around this on the next slide. But basically, you will get a reduction in the forgiveness amount, which will become a loan, which will be amortized over 10 years at 4% interest. But the reduction will be based on the payroll cost figure that you calculated times the average. Now, then you've got to determine this next number here. You're going to take the average number of employees for 8 weeks beginning on loan origination, and you're going to divide it by one of these three options. Option 1 is your average number of employees from February 15th, 2019 to June 30th, 2019. Option 2 is average number of employees this year, January, February, through February 29th, 2020. If you're seasonal, you take the average number of FTEs or employees from February 15th of 2019 through June 30th of 2019. So this is a little complicated. We are trying to get really good guidance on the actual calculation, but for the most part, the goal is that you will retain your employees or hire them back, because there's also going to be a reduction based on a reduction in pay. So you're going to take your payroll costs and subtract for any employee who did not earn during any period in 2019 wages at an annual. So take the people over 100,000. For those under, the amount of reduction in wages that is greater than 25% compared to their most recent full quarter will be reduced also. So we're working on getting these calculations out to everybody, and we will help you through this. But basically what the goal here is that you maintain your employees, or if you've already had a layoff or have to have a layoff, the goal is that you get 8 weeks worth of payroll and rent or mortgage expense, and you're able to hire them back by June 30th. So there's some different options on how to calculate this, and we're going to continue to help get you guys clarification. Also, regarding the forgiveness, payroll costs, mortgage interest payments, rent, and covered utilities paid by the borrower during the 8-week period beginning of loan origination that's the piece that can be forgiven, depending on those numbers previously that I just showed, the reductions. But you have 8 weeks from the time you get the loan to spend that money. Anything left over that has not been used to pay payroll, mortgage, rent, utilities will not be forgiven. So the goal for this loan is to get people hired back, either kept, retained, or hired back quickly. So that's the purpose of the 8-week period that you have to spend it. Anything over that will become a loan. For businesses, and this is what I was just saying, for businesses who have already laid off employees or are planning to lay off employees or cut salaries, as long as the changes were made between February 15th, 2020 and April 26, 2020, the reductions will not be applied if the business rehires the employees or increases the cut salaries by June 30th, 2020. So you have until the end of June to hire people back and increase their wages back if you've reduced their wages. Another piece that's important is the amount of the loan forgiven is excluded from taxable income. So that's great news. We're going to be working on helping our clients with calculations both on the, right now on the payroll numbers, and then on the forgiven, I'm going to go into that a little bit on what I solved and what we are doing. How to apply. Number one is your financial institution. So you reach out to your banker, find out how prepared they are and what they are going to require. I've seen a combination of different things of what they're looking for. Some banks are not prepared at all, and they're saying they need 30 days to get prepared. And most of you know that a lot of small businesses don't have 30 days. So that's what we've all been trying to tell them. There's also a website that gives you the top, I think it's the top 100 most active SBA lenders in the U.S. And you'll get a copy of this after, within 24 hours, hopefully sooner. But you can also go Google that, top 100 most active SBA lenders, and you can see who's really prepared and understands the SBA process. The other thing that I wanted to get out to everybody here, a lot of financial technology companies such as Kabbage, if you've heard of Kabbage, I know them well, and they are also trying to get involved with the banks. In some cases, these fintech companies are becoming the back end for banks that were not prepared to make these types of loans quickly. Kabbage right now is an example that I am familiar with. And at a minimum, I would sign up on their site. They've got a site now. It's kabbage.com/COVID-relief. If you're interested, go look at that. I was given that URL, and I did have to put in a few pieces of information. Average monthly payroll, dollars, name, email address. I think that was basically it. But they are saying that first of all, you're signing up for an alert. They're going to let you know what's going on. And they're also saying that they're going to help speed through the process. So I signed up because I want to get the alerts. I'm going to see what they're up to. So that's just something I wanted to share and pass along to everybody here. Okay, I'm going to move from the PPP just to spend a couple minutes on a few other items that's in the CARES Act. One is called the Employee Retention Credit, and this is interesting for those that have had a decline of more than 50% gross receipts. So I'm thinking of restaurants, hotels, any type company that's really been hit hard through this, but has maintained some employees to keep them going. So some restaurants are offering delivery service, and they're keeping some of their employees. So the Employee Retention Credit is going to be a refundable payroll tax credit for employers subjected to closure due to this pandemic. It's the employer 6.2% employer tax, up to $10,000 per employee per quarter. Anything over and above, and this is interesting here, anything over and above the credit of that employer tax, because we know that's only a certain amount, 6.2% employer tax if you've got a skeleton crew. What they're saying is anything over that credit will be treated as an overpayment and refunded. How fast that's going to happen, I don't know yet, but they are looking at you getting refunded or credited to maintain people where you've been really affected negatively, and to retain that skeleton crew, you're going to get 50% of their wages credited back to you. So there are a few rules here. If you have greater than 100 employees, the qualifying wages are those paid to employees not working. If you have fewer than 100 employees, the qualifying wages are for all employees. So I can get more information out on this, but if this is something that your company or your church, or if you've been hit really, really hard, but you're maintaining a skeleton crew, reach out. Let me know if you want more information on this, because this is going to become important. And, my belief is let's take advantage of everything we can during this time. Everybody's heard of the deferment of employer Social Security tax. There are some rules around this, and you as a company have to look and see what's most important. There is a delay of the employer share, which is 6.2% on top of wages, as you probably know, the Social Security taxes. So it starts from any employer you're paying when the act was signed, which I can't remember. I know it goes in effect April 1, so let's say April 1, and it may have been March when it was signed. So, but until January 1st of 2021. So for the rest of this year, you can delay paying the 6.2% of the Social Security taxes. 50% of that will be due by the end of 2021, and the other 50% will not be due until the end of 2022. One caveat: you cannot use this delay of employer tax if you're also getting loan forgiveness through the PPP. I'm trying to get clarification to see if you can use both if you are going to take the PPP as a loan. But for the piece that you're getting forgiven, so it's a grant, then you are not eligible to also delay employer Social Security tax. So that's a little caveat there. I wanted to touch on unemployment. Most of you have already been dealing with this. And I know our team is prepared to help show you how to apply for unemployment for anyone you're having to lay off. We have gotten very good at that, unfortunately. But there is in the CARES Act, there's an increase of the unemployment benefits. So that extends the unemployment compensation an additional $600 over and above the state. So $600 additional per week for up to 4 months. So I've told some of my clients that I've talked to personally that have really, really good employees that they don't want to lose long term, but they've had to lay them off, to explain this to them and help them get the additional unemployment that they are eligible for until they can hire them back. There are some challenges to this in that there are some employees that will make more money in unemployment, and this was holding it up a little bit in the Senate, but they finally just had to pass it. There's some employees that will be paid more under unemployment than maybe they were making originally, and that is definitely true. So I know there's some companies, manufacturing companies, that are maybe having a hard time keeping people, but that is a little bit of issue going on right now. But if you have employees you've had to lay off, let them know. Make sure they know about that. When I had Scott Massley, who is our chief HR officer, who also does HR outsourcing for some of our clients. He researched this, and the way that when you apply through for the state unemployment on behalf of your employees that you're having to lay off, it will also tie in and apply for this additional extension. So that's all you have to do is apply through the state, as you already probably have been. And if you need help on that, let us know. Let your account manager know, because we've gotten pretty good at that. Okay, I had some questions on how is iSolved, the platform, handling this? And we are getting updated nonstop. As you can imagine, government makes a quick decision, and which is needed, and we needed this. But software companies and everybody else has to figure out what they actually meant by it. And there are a lot of still issues to be answered, such as, like we talked about a minute ago, is housing allowance included? Well, a lot of those things weren't thought about when they passed this. So same thing with software companies having to get to the bottom of exactly what this means and catching up. So the paid leave tax credits that I know iSolved has been working through that are effective April 1 through 12/31. The first release to try to handle this, there were some issues with how the earnings codes were set up. So now just so if you have already set some of these up, your account manager with Thread will be helping you make the changes necessary here. But there are some new codes that are being set up: COVID-19 paid sick, COVID-19 paid FMLA, and COVID-19 qualified health plan expenses. So those are some of the codes that are now being set up. iSolved is working on the functionality to automatically calculate, track, and automatically apply payroll tax credits. It should be in the April 10th release. We wish that we had it right now, but they're having to, like I said, figure it out exactly and then code it in the software. And if any of you have ever I had my days of having to learn some type of software development back in the day in college, and it's not easy. But the 410 release, since it went into effect 4/1, there's a couple options that we can help you with: applying for accelerated refund with the IRS, or delaying the credits until this release, which is April 10th, so coming very soon. There's a couple more things I know iSolved is working on. They're working on what I talked about, the employee retention credit, about the if you've lost 50% or more of gross receipts, and you're going to have these credits to pay for 50% of the employee wages that you've retained. They're working on an update to calculate that. So the employee tax retention credit tracking. More information as I get it, I'll share that. Also, the deferred payroll tax is also being reviewed to figure out how they can track that in the system. They're also looking to automate the report needed for the payroll protection program. We're also working as a company to help our clients with this. We would love to have this automated in iSolved, but they are working to try to see if they can automate the reporting needed for that. In the meantime, if the capabilities come up for being able to apply for these loans quickly, then we're going to help you get through this, even if the automated report's not done. So we're going to continue to work with each and every one of you on iSolved setup and iSolved updates, but I wanted to give you just a quick and dirty overview of what is being done from an iSolved perspective. They're on top of this. And then lastly, I wanted to just quickly talk about how Thread is helping and what we're doing, a few things that we're doing now and are going to do. One is we usually charge for $0 payrolls, and as clients sometimes run inconsistently, we will charge a fee for running a zero, but we have waived all $0 payrolls needed due to layoffs. So I know some of our clients out there that have laid off 100% of their team right now. We're not charging. Our goal there is to keep your account live and in compliance and help you get through this. So we've waived all of those fees, and we're just going to keep that account running and live and compliant, so that when you're able to get back up and running, we'll be there, and there will be no need to update a lot of things in the system. We've continually put a bunch of information. I'm thankful to my marketing manager, Barbara Collins, for my chief HR officer, Scott Massley, and some other people that are keeping this resource page. I've been doing some quick little videos as well, but this is the threadhcm.com. If you go to our website at the top, you can click on the coronavirus response, and we are updating that ongoing every day throughout the day. So that's one thing we're trying to do. We've done a good number of webinars, and we're trying to continue to do quick ones. I know that you guys are flooded with information right now, so we don't want to take a lot of your time, but we're trying to keep you updated on what's going on. We are working right now. I've asked my team, headed by Matt Mitchum, to work on developing the reports to help you with this PPP application. So I've heard some financial institutions say they're going to try to be ready by the end of this week for applications. I've heard some banks say that it's going to be a couple weeks. We're hoping sooner than later. If the availability for these applications is sooner than iSolved being able to automate, we are here to help you go through those calculations. And I'm going to give more information on that. I've got Matt working on that now to come up with a process for us to help with that, with the calculation on payroll. We have all the data, so It takes a couple different reports to include your health insurance premiums, your 401k, retirement benefits, and overall gross payroll, but we're working on that now. And then in the meantime, I think I mentioned we recently rolled out a couple quarters ago our HR outsourcing division headed by Scott Massley, and some of you may have listened to some of his webinars regarding the FMLA and unemployment and some other things. I've seen him helping some of our HR clients, and it's been, amazing to see what he has been able to do to help them through this hard time. And what we've offered right now, and I've talked to Scott, is we've already been doing this with some of our non-HR clients, but we're offering an hour consultation free of charge. If you have just some questions that you need to ask on layoffs, on how to file unemployment on behalf of your employees, anything that you would love to just get some guidance on. Not necessarily, he's not a legal attorney. We do have access to an employment attorney as well, and we did a webinar with someone in the past. But anything HR related that Scott may be able to help you with, please reach out. You can reach out in this thread, or you can reach out to your current support specialist and just say, hey, I know that Scott Massley is available to help. We would love to sign up and get a little bit of his time. Obviously, I'm available too. I've been trying to reach out to individual clients as much as I can, and if there's anything that I can help with, please reach out. Let your account specialist know that you'd like a phone call from me or a phone call from Scott, and we're here to help you. You'll hear more information on what we're doing from an ISOL perspective, what we're doing from a payroll calculation perspective in the next couple days. So give us, be a little patient, but we're working to get that out to you as quickly as possible. And the last thing I just want to say here is, let's just all stay calm. There's not a whole lot we can do on some of these things. We're going to win this thing together. That's what I've been telling my team. I feel like all of us on the other side will be better businesses because of this in some way, shape, or form. At least I hope so. Around readiness, remote working, financial health. So, I'm in it to help you guys, and Thread here to support you as much as we can. I'm going to get answers to any questions that you may have. You can send questions through the chat. I'm going to respond to them. If there are any questions that were submitted prior in the sign up that I did not answer, I'm going to get the answers out to that. And without further ado, I'm going to thank you guys for sitting in on this. I know everybody's busy, and we'll continue to keep you updated. Thank you guys so much.